This video outlines the structural incompatibility between institutional stability and the rise of Christian nationalism. The objective is to present a sober, center-right critique focused on market health and constitutional order, avoiding the emotive language of the current political cycle. 1. Erosion of professional technocracy. Modern global markets are built on a foundation of expert-led institutions. Whether it is the Federal Reserve's data-driven interest rate adjustments or public health modeling that ensures workforce stability, markets rely on predictable expertise. Christian nationalism introduces a systemic risk by prioritizing ideological purity over empirical evidence. When policy is dictated by theological assertion rather than economic modeling, the risk of black swan events increases. Investors can manage known risks, they cannot manage institutional blindness. 2. Heightened risk of civil volatility. Capital seeks environments characterized by social cohesion and the quiet resolution of disputes. Movements centered on sacred identity conflicts tend to be zero-sum. They do not seek compromise, but victory. This creates an environment ripe for sustained civil unrest, strikes, and political violence. Because identity-based grievances are harder to de-escalate than policy-based ones, the stability premium of the United States is diminished. Markets are already pricing in the cost of a domestic landscape defined by cultural friction rather than consensus. 3. Alienation of global capital. The United States has long been the world's safe harbor because its governance is perceived as pluralistic and institutionally boring. Christian nationalism signals to the global community that the U.S. is moving toward a more insular, identity-driven model. This shifts the perception of the U.S. from a neutral arbiter of global commerce to a nation distracted by internal cultural purges. Capital is inherently cautious. If the American project appears to be trading its secular stability for sectarian conflict, global investors will look toward more predictable jurisdictions. 4. Policy whims and market whiplash. Predictable regulation is the bloodline of long-term planning. Christian nationalist movements frequently engage in values signaling that targets specific industries, such as tech, healthcare, or media, for symbolic or moral reasons rather than economic ones. This creates a climate of regulatory whiplash. Investors do not necessarily fear conservative or liberal leanings. They fear the sudden reversal of settled policy based on moral crusades. When moral indignation replaces economic coherence, the cost of doing business rises. 5. The politicization of the rule of law. The most significant threat to the market is the subversion of the rule of law into a tool for religious or sectarian identity. Markets function on the premise that a contract is a contract, regardless of the faith or identity of the parties involved. Christian nationalism suggests that the law should serve a specific religious in-group rather than neutral constitutional principles. Once the judiciary and regulatory bodies begin to apply loyalty tests or theological filters, the fundamental certainty required for capital investment vanishes. Conclusion. The critique of Christian nationalism from a center-right perspective is not necessarily a theological one, but a procedural one. Our constitutional order was designed to provide a stable, pluralistic framework where commerce could flourish regardless of private devotion. By substituting predictable pluralism with identity-based governance, Christian nationalism acts as a certainty shredder. Markets do not invest in righteousness, they invest in the boring, reliable stability of the law.